Hello everybody and welcome to this daily market or forex market outlook. Today we are going to have a look at the USD Japanese yen pair. So first of all, what I have to tell you, I have to tell you something very important. So I'm doing these videos because I'm sharing, like my 4 years of experience in trading, and basically what I've been doing during these 4 years, I've been trading forex and indices, and I'm mainly, like scalping the DAX, and also, like when some opportunities arise in, like in, be it, like in gold or, like forex, etc. I just, take that opportunity and, like put my money where my mouth is, and just, use technical analysis that I have developed myself. That is, like a blend between what I've read and what I've, like what I've learned. So I'll be very honest with you. I am not someone that is selling courses and trying to make money off people, etc. I'm a person that is very, like that is very help. I mean, I'm someone that wants to help. Okay, I don't want to see people losing their money, because I've lost my money too. So I started trading forex. I lost my money, and I had to restart again, and I had to do it, like many times. Why? Because, like I didn't understand how to trade. It's not as easy as, like doing a forecast. I can do forecasts. Why? Because I see I'm in front of, like I'm in front of my screens every day, so I'm looking at it every day. So of course at a certain point you understand what's going on, but I mean, it takes time, like to get to that aha moment, and then realize that why you were what you were doing, what was wrong, or what you didn't really understand. And then it gets easier. It will never get easy, but it gets easier. Okay, anyways, let's get started. I'm going to do, like a whole video about, techniques and what I've learned, and why I think that it's important for anyone that wants to trade, or that wants, like to get into trading, to at least, like get some coaching and learn from someone that has already, like been doing it for some time, and was able to be consistent, and to stay, like to stay consistent during, like different phases of different market phases. Anyways, let's get going. So today we have the USD Japanese yen, and this is my fourth or fifth video for the night, and I'm getting tired, but still I have to give you, like this. I had, like to give you this, like this trade setup, because this has the potential to go much lower. Okay, let's have a look. This is just the first, for me this is just, like the first impulse down, and this is just, like the first correction. So as you can see, you see why price is, I mean, bouncing back, because we are getting close to, like the 50%. Okay, so price is bouncing back, but you shouldn't, this is not what is important. What is important is that we have, like a price has been, let's draw it like this. So we have lower highs. All right, so we have lower highs here, but more importantly, we have, like we have a shape here that is a corrective structure, ABC. Okay, so we have an ABC structure. Let's see if I can find it here, because I don't use ABC. Okay, so we have A and a B, and you have a C. Okay, so what does it tell us? It tells us that, like we'll most likely, maybe not tomorrow, maybe until next week, we'll have, like a continuation okay, to the downside. Okay, so what you should be aware of when trading is that these forecasts, they can work, and they can, like, they are based on probabilities. Like, shapes can change. So what would be, what would make, like, this correction invalid? If not, even if we break this high, the correction is going to be invalid if we break, like, like the summit here. So if we are going to break this summit, this correction is going to be, like, invalid. But what can get invalid is that we can break and we can tag this high before, like, going down. All right, so this is going to be, like, an expanding flat. Okay, so this is going to be an expanding, like, sorry, excuse me, my drawing is awful. I'm just going to do this so you can see it. So this is going to be just an expanding, like an expanding flat. So if we have an expanding flat, what do we have? We have another structure, but still corrective structure. Alright. I'm just wasting so much time doing this because I'm not used to it yet. Okay, so we'll have like, price go above, like, the A, and form a C here. All right, so it can also, like, go and form a C here before, like, going down. Okay, so before price going for, like, the down move, before resuming the down move, and it will still be a valid structure. Okay, but right now it looks like more of a contracting. Okay, so price is in a contracting flat, and you should be aware of this opportunity because you can see it clearly. This is very easy. This is, like, this is, like, a by the books, like, structure. You have an impulse, okay, and you have a correction, and what comes after that, 90% or 85% of the time, the second leg, the second impulse. 1, 2, 3. Okay, so you should be aware of this opportunity, and you should be able, like, to take advantage of this opportunity as soon as you see that, like, a price is going to stay below this level and is going to break. If you want to be even, like, extra sure, you can just wait until it breaks, like, the 106.44, which corresponds to the 50% retracement of Fibonacci level. Okay, so, and then your stop loss, like, your stop loss should be placed, like, at 19. Okay, 109, 109.46. Okay, then you have more than 1:1 risk to reward ratio. You'll have, like, much more, and it's going to be until 101, right? 101 to almost 126. So 500 versus this is 640. This is 500, 300 risk. So almost, like, 2:1 risk to reward ratio. Okay, so this is for swing traders, and I'll be sharing more, like, daily, maybe daily, like, daily setups for day traders also, because I'm a day trader, but from time to time I can also, like, swing trade when the opportunities are easy to spot and when structures are very clear and very easy to read. Because what you should understand in trading, you have 80% of the time that you do nothing. You have structures that are not obvious, and then you have a 10% of the time where you'll find, like, sell opportunities, and then another 10% of the time where you'll find buy opportunities. But 80% of the time you'll be just looking at your chart and just staying, like, staying out of the market. It can be frustrating from time to time, but this is the only way that you can make money on the markets. So this is it, and I wish you good luck, and I'll talk to you very soon.